The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 13th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that just simply help us and tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool. I know you're going to love this tool. I know you love it each and every day. This is a tool called Success Breeds Success. Now, chances are you've heard or you've certainly even uttered those words, success breeds success. So what does it mean? Or how in the heck was it actually derived? Something to think about. Now, here's my take on why success breeds success. You know, it's because of the two most fundamental laws of the universe. These two laws being, number one, you know this, the law of attraction, and number two, the law of inertia. Now, the law of attraction says that like attracts like. We attract into our life a reflection of who we are, through our thoughts, through our beliefs. Let me ask you this question. Do you think a person that believes they are successful has a better chance of attracting success than the person who, believes that they're maybe not so successful, maybe even a failure? Who's going to attract more success in their life? Of course, we know that if that our beliefs are going to attract whatever it is that we're believing into ourselves. How important is confidence? How important is confidence when it comes to success? I'd say really, really important. And I got to, those of you that were watching golf yesterday, we got to see this play out. I watch it play out time and time again. I watched it yesterday on the 17th hole at the TPC golf tournament when Sergio Garcia stepped up, tied for the lead as he went about his work on the island hole. Now, it was Sergio against Tiger, or better yet, it was really successful Sergio against, maybe not so successful Sergio, maybe not so confident Sergio. Folks, this is a 135-yard par 3, a wedge for most players, 9-iron at most. No substantial wind to speak of, just Sergio versus Sergio, or Sergio's mind versus Sergio. Success versus maybe, I'm not so successful. And in Sergio's case, turned out to be a crash and burn time, a real live tin cup moment, if you've watched that movie. Life imitating art. Folks, it wasn't Sergio's skill. It was his mind. I played the island hole at TPC many, many, many times. I play a very similar hole. I've played it for over 25 years. Very similar. In fact, more difficult than that island hole. I played it over 1,500 times. And I can tell you with certainty, it's always a matter of your mind. It is not your skill out there. Now, I also mentioned the law of inertia. And it's the law of inertia that is key to the belief, in my opinion, that success breeds success. Because the law of inertia says that it's easier for something that is in motion to stay in motion. And therefore, a strong belief in yourself will continue that motion, just as a weak belief in yourself will continue that same weak motion out there. Think of it like this as it applies to your life, as it applies to some outcome that you're after, some outcome that you've got written down right now on a piece of paper. 50% of achieving that task is just simply beginning the task. Once that task has begun, the law of inertia will take over, and it will propel you to finish that task. Folks, success does breed success. Find the inertia. to begin the process and believe like you've never believed before in yourself, and you will attract like you've never attracted before. Let's go check out these markets here. Let's see what they're attracting into our lives right now. We've got the Dow futures off about 21 points, trading out at 15,047. ES Mini down almost about 3 points, trading at 1626. NASDAQ futures off 3, trade at 29.72. King dollar up about 4 ticks right now. We've got the euro back just a tad out here. Gold trading off 370, trading at about 14.33 we'll call it. Silver up 3 pennies, trading at 23.69. Light sweet crude back 85 cents, trade at 95.19 right now. Our call-in number is 877-927-6648. A quick peek over the pond here. A flat market over in Germany. The DAX is off 2 points. FTSE off 4. Over in Asia last night, a little bit of a mixed bag out there. The Nikkei up another 1% as it continues its ascent. That was up 174 points. They closed out at 14,782, while the Hang Seng said, I don't think so. Off 1.4%, off 331 points out here. Let's go take a look at, let's start off by taking a look at the markets here. Let's take a look at the NQ, NASDAQ futures, and let's look at it on a 30-minute chart. If you are watching us on Tiger TV, thanks so much for doing that. Maybe you're listening in on the radio or your mobile device at tfnn.mobi. Remember, this show will stream live to that device. If you go to the homepage of tfnn.com, over on the right-hand side, you'll see a button. Click on that. The show will stream live. And if you would like, folks, if you would like to see the show in HD, well, just go to the homepage of TFNN.com and sign up for the Tigers Den. You can test drive that for 30 days for free. As we take a look here at the NASDAQ futures, what we can see, what the NASDAQ futures did as we were coming into the 9 o'clock session here, 8:30 session, 9 o'clock session this morning, NASDAQ futures got back up inside that little rising price channel that it has been traveling in really since the April time frame, April the 18th out there, almost a full month of this rising price channel. Broke through it just a tad here earlier this morning. We had the futures gap down this morning here, and they pretty much traded lower. NASDAQ futures, when they moved down, when they were breaking that rising price channel at about 3:30 in the morning. When you break through a price channel, what happens? Well, typically price will go and try to get back inside. And right now, that's what we've got going on inside the NASDAQ futures on the 30-minute chart. Doesn't look like it's ready to bust them down. What does that mean? It will take another run for the highs. In this case here, the highs would be, as of Friday, the 415 level, right around the 29.78 area. We can see here where the market had not gap down. Yeah, had gap down just a tad here. And so that's really the NASDAQ futures right now have, the NASDAQ has been strong in the marketplace, certainly strong coming off of the April lows out here. We know that with Apple's participation in there. In fact, we'll take a look at a longer-term chart of an Apple chart. I'll show you something that maybe you've overlooked out here, and it's important. It's going to be very important to understand where the price of Apple continues to go from this point forward. But right now, NASDAQ futures have broken back inside the rising price channel, and as long as they stay up here, says that prices can continue to drift higher. Now, the market is neither overbought nor oversold in the 30-minute chart out here. So other than breaking inside that rising price channel, that's the only piece of information that we've got. But what that piece of information says to us, the market is perhaps not ready to break down just yet. We go take a look at the ES Mini. Let's go see what that is doing now. And the ES Mini never getting down to really test its rising price channel. Also going back into that April time frame. What the ES Mini did do on Friday at about 12:30 was tested the 200-day exponential moving average as it got down to a low of about 16.2025. Even here earlier this morning at 6:30, 7 o'clock in the morning, as the market was trading a bit lower, never got down to touch that 200-period EMA. That is on the 30-minute chart here. If we go take a look at the Dow, let's go take a look at the Dow on the 30-minute chart as well. The YM out here, let's see what it is doing. Nowhere near the bottom of its rising price channel out here. Guess I could put the 200 exponential moving average on this chart here for you. That's the black line. You can see also on Friday at about 12:30, the price moving down into that 14,998 level. That was just doing nothing more than finding support at that 200-day exponential moving average. If we take a look here at let's go see what's going on inside the currency market. Let's go take a look at the Queen. Actually, let's start off by looking. Let's keep this somewhat simple. Let's take a look at the 30-minute chart. Now we'll come back to the daily chart here that I've got up on my screen. As we take a look at the 30-minute chart, as you know, we identified that Gartley sell pattern. This Gartley sell pattern occurring back at the 12 noon time frame. This was back on May the 8th. If you're asking what is a Gartley pattern, well, Gartley pattern is where you have an A to B equals CD. You may not even know what that is, and we'll certainly describe that to you. Basically, a Gartley pattern. In this case here, this was a Gartley sell. You had an initial move down. That initial move down starting at 8:30 in the morning on May Day, on May the 1st, and the move down was off of the high at about 1.3241, all the way down to a low that came in at 9:30 in the morning on May the 3rd. For those of you that would have been then looking to sell the euro out here, what you would have been waiting for is a move up. We call that move an A to B equals CD pattern. In this case here, your A point would have been the low that came in at 9 o'clock in the morning, out at 1.3032. Your B point on the move up, which is also referred to as that lightning bolt pattern, that would have been at the high coming in at 11 o'clock in the morning, out at on May the 3rd. That level, 1.3158. Then it makes a retracement, almost a move of a move, coming back to the time frame of 12 noon on May 16th. Then what it does, it makes another complete move all the way up to where it ties into what's referred to as a Fibonacci retracement. That retracement from the original move down that started on May Day all the way down to the B point, the point down here at 9:30 in the morning on May the 3rd. That retracement level, 0.786. There's three retracement levels you always want to be paying attention to: 0.382, 0.618, and 0.786. It makes the ladder here, and as it makes the ladder, that was your sell pattern, and the ultimate outcome of any Gartley buy or sell pattern, in this case here was a sell pattern, is the mere fact that it sets up a larger A to B equals CD down. In this case here, it made the 1-to-1. The Bulls came in. They lost control. Coming into the 10:30 session on Friday, and then the A to B equals CD that was completed was the 1 to 1.272, or very close to it. That price projection was 1.2930. You had the euro at 11.30 get down to 1.2934 out there. So very, very close. Now what we've seen is nothing more than a sideways move. As we speak about sideways moves, well, that takes us over here to the daily chart. And we can see on the euro coming into the time frame for the last month, from April the 5th, through today, the euro has been traveling in a sideways consolidation range. What does that mean to us? Well, that means we know how to measure the next move inside the euro, regardless of which way it breaks. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hope everybody had a great weekend, especially all those incredible mothers out there. Hope that it was a great Mother's Day weekend for each of you. As we take a look at the markets here, things popping and dropping early on. The leader in the clubhouse here in the pre-markets is, dollar-wise, is Tesla Motors, TSLA. Looks like they may try to gap up again here this morning. They close at 76.76. Right now, the last trade firing off at 81.49. Theravance, THRX, that has been a little rocket ship as well. Looks like it's got some more fuel in its engines. They close at 34.94. Last trade here firing off at 39.50. Let's take a look at an equity that I don't think that we have taken a look at on this show here. It's called Perion Networks. PERI is the ticker symbol. Now, what Perion Networks does, they are a consumer internet company, and they engage in the development of various applications that designs and markets consumer products, including, this is a pretty cool name, Increda Mail. How about that? So that was good thinking on their part, certainly from a marketing standpoint. I've never used IncrediMail, but I may take a look at it. It's a messaging application to manage various email accounts and Facebook messages with graphic and personalization capabilities. They call it Sweet IM out there. So we'll have to take a look at Perion Network. Again, the ticker symbol is PERI. But let's go take a look at the actual stock chart out here. Don't know anything about this company. What we can take a look at is not a lot of liquidity from a share movement standpoint, at least up until the time frame here of January the 8th out here when we saw 3.8 million shares. But prior to that, average volume was, in the 20, 30, 40, maybe 100,000 was a big day inside this equity. But this thing really broke out with huge volume. That was on January 8th, 3.8 million shares. Now, the breakout session took place the day before. That was on January 7th, 146,000 shares. As price comes back into this area, now what it does, folks, is it gaps up on January 8th, and it gets up to a high there of 1247. Makes a slightly higher high a few trading sessions later, January the 16th, gets up to a price point of 1310. Then goes ahead and moves back to the breakout area. There was actually a slight gap down. This was with some decent volume here, 1.9 million shares on January 23rd. But, of course, that really was going against the 3.8 million shares out there. As it comes back into the breakout area, it does it on February 4th, 743,000 shares. Again, going against that 3.8 million shares out here. Continues to makes a little bit of a lower low out here. I'm going to put a couple of things on the chart here for us, a couple of studies, a couple of tools here, just so we can take a look at this equity. So it pulls back with some lighter volume, and we see one of your favorite hammer candles. In fact, we see a couple of them. And let's draw the lines, and that is the hammer candles. The first one actually was prior to the breakout session. The first hammer on our chart occurred on December 21st. We're going to draw a line across the screen out here, and this will just simply show you how you can easily identify where the bulls and the bears are, where the bulls are going to defend their position or where the bears are going to be defending their position. Once the market breaks through, it's just like a battle. It's nothing more than a battle. There are signs, there are signals that are out here. These are signals that you can rely upon because they just help you interpret the message of the markets. And that's really what the secret is trying to understand where those areas are. Well, how important is the hammer candle that occurred here back on December 21st? Only 91,000 shares occurred on that trading session. As the market pulls back on March the 30th of March 20th, 2013, pulls back with 437,000 shares into that hammer candle. Remember, our benchmark here was the move higher, was the breakout session from January 8th. And what does it form on March the 20th? Our second hammer forms that second hammer as it comes into this black or dark green line. That is your 200-day exponential moving average out there. And what's the market do? Just simply continues now to move higher. Makes this little bearish candle all the way up here at the high. So we know that where the bears really are hanging out is right up here on May 7th. May 7th, we also saw a bearish engulfing candle right back here on January the 18th, little dark cloud cover right in here. On January the 15th, little shooting star I can see right here on January 11th out here. So we can clearly see the line between the bulls and the bears somewhere up in this area towards its highs right now. Now, this morning, right now, the last trade here fired off at, let me see here, this is on Perion Networks. Last trade firing off at 14.15. It is going to jump over the resistance area here this morning, taking out the highs from May 7th. If it does it on volume, setting up another A to B equals C, D up. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 30 points, trade out at 15,089. S&P down 3, trade at 1630. Composite off 4 at 3432. Russell 2000 down a point, trade at 973. Google to the downside by $2.25. Apple to the upside by $2.75. Microsoft up 4 ticks. Intel off 5. Cisco up 5 pennies. Leading the charge, the upside, Theravance, THRX, up 12% this morning. Another nice move there, up $4.36. Tesla Motors up 5% this morning, up 4 1/4. Then you've got Apple right behind them. Behind that, Solar City, SCTY, up 8% this morning, up $2 and change. Toyota Motor up 1.5%. First Solar is up about 3.5% here. Michael Kors, haven't looked at that for a while. We should do that today. KORS up about 3%. Sun Power Corp, SPWR up 7%. Perion Networks, we were looking at that before the bell. I want to go back to that here just for a moment, because we want to, just go ahead and finish off taking a look at this equity. Now, to the downside, Endo Health off 6% this morning. ENDP is the ticker symbol. That's off $2. Google down $1.40. Yum Brands, YUM, off not much, about $1 here. That's off 1.5 points. LinkedIn struggling, down about 1% off $1.57. They've got that island top reversal in there for one of the strong stocks. Not a good thing to see. Amgen off about 1%, off about $1. So no real big, huge losers out there in the marketplace at the moment. So back to, it's not Peroni, although I do like Peroni. This one is called Perion Networks here. Now, if it can close above today, if it can close above the price point of $13.90, that's the most recent swing point. That is May 7th. That is not your B point of the A to B equals CD. Your B point is going to be that swing point right here from January the 17th. That high, January 16th, $13.10. Only 1 million shares. Now, only been open for 6 minutes, and this has already done 792,000 shares. So it's got the volume. It's got the volume, and if you take a look at possible A to B equals CD up patterns on this, this says that Perion Networks actually wants to trade to 1760 out there. So you're going to have the volume, and what you want to see it do today is close above its most recent resistance point out here, and that would be your May 8th bearish engulfing candle out there. If we pull this back, I haven't looked at the weekly chart out here, but we're going to here momentarily. Let's put this on the weekly chart. Let's see if the weekly chart has anything that we should be concerned about here. That means you always want to be pulling a stock chart back even further when you take a look at it. So let's pull this in, and this is nope. No problems here whatsoever. If we take a look at the original A to B equals CD pattern, let's go see if that has completed. Looks like that probably has. Your A point on the weekly takes you back into November 21st, 2008. $1.86 is the low. That's your A point. Your B point is the September 4th week. Again, we're looking at a weekly chart. September 4th, 2009, $10.89. Your C point is a move all the way down. Looks like a little hammer candle back there on the weekly chart as well. Looks like this chart favors hammer candles out here. That is your December 9th level. So it has completed the 1-to-1 A to B equals CD, and it was doing that with volume. That was the week of January 11th out there. So what is nice about this equity is you should have some good support. Support level 1 is going to be your January 11th high right in that 1274-ish range. Your secondary support, unfortunately, much lower, down about 819 out there, and that's the swing point low recently from March 22nd, 2013. Your 1 to 1.272 takes you to 1494. So that's what your A to B equals CD on the weekly. That's your 1 to 1.272, and 1805 is 1 to 1.618. Let's go see, because I don't remember what the daily said. So 1494 and 1805 on the daily. It says it wants 1760. So I would say that it's most likely the weekly 1 to 1.618. That is on Perion Networks out there. So let's go take a look at some of these other. Well, actually, before we do that, I mentioned we were talking about hammer candles, and I said, Apple's going to be important to pay attention to, and so let me show you the reason why. I noticed this last week, pointed out to subscribers here, and Apple on its way down here. The last week's session, was it last week? I'm sorry, I'm on the monthly chart here. So it was the month of April here as it was making its low down to that 385.10, and then went ahead and pushed forward here. It created a hammer candle. So on a monthly basis, I should say, my apologies, on a monthly basis, Apple completed the 1 to 1 A to B equals CD down. That was off of the high from the month of September 30th, 705.07. That was your A point. Your B point was the candle low on November 30th, 505.75. Makes a 0.382 retracement. Often a danger sign, often a sign that you're going to make more than a 1 to 1 A to B equals CD. That was your December 31st high. That was 594.59. The 1 to 1 full extension, 395.53. But in the month here of April, forming a hammer candle. Now, What's important about that? Well, number one, if you break that low, 385.10, it really says look out below. Because on a monthly basis, on Apple, to go ahead and break a hammer candle, that would be a very telling sign out here. Now, on the other hand, because on the monthly chart you do have a hammer, and even though on a daily chart I've been calling for a lower low inside Apple, I'm about to say, not so fast, young man out here. In fact, he had a little bit higher move this month, so you are confirming this hammer candle out here, and looks like we've got a very significant low put in at 385.10. That is on a monthly hammer. Monthly is more important than weekly. Weekly is more important than daily, and that's why it's always important to go take a look at those stock charts. Likewise, out here, if in fact that low gets taken out, where will price go to? Well, not only will it make the 1 to 1.272 A to B equals CD down, that's taking you into the 341 level inside Apple. I would say, well, it'll take you at least down to the lows of about 310 or so, and as long as it get to 310, might as well do the 1 to 1.618 A to B equals CD. Now, if we take a look at just normal retracements off of the low, we're looking at the monthly chart of Apple here, all the way up to the high, and the low is the low coming in January of 2009 out at 78.20, all the way up to 705.07. What we can see is that, well, I'll make it so it's a little bit easier for you to see, actually. I'll put a little bit darker lines out there. Let's see if we can do that there. Some dark green lines. What we can see is down at that 317 level is that 0.618 area inside Apple. So it's put in a really nice, strong hammer candle, and that helps you both from a bullish and bearish standpoint to understand what this equity can or will do. So important to go ahead and note, in my opinion, it's important to note on your stock charts, especially because of the weighting inside the NASDAQ that Apple still has as we speak, inside the Qs. Let's go take a look at some of these other stocks here that are beginning to move in the marketplace. To the downside, we've got Joseph A. Banks. Let's see if they were out with numbers out here. JOSB is the ticker symbol, and I don't see the actual numbers other than they expect earnings per share of about 27 to 30% out here. So Joseph A. Banks projects sharp fall in Q1 earnings. So that's all we've got. Let's go take a look and see what it is doing stock chart-wise. Again, JOSB is the ticker symbol, and these are the guys that market, come on in, buy one for free, and we give you the store. That's a nice deal out there. Buy one and get five or something like that. That means that one has got to be marked up pretty healthily in order. I don't know, healthily is a word. In fact, it doesn't even sound like a good word, but I don't know how healthy that is. Now, I know that's a word. So gapping down here this morning, let's go CEO. It's got a high volume low out here. How about that? So let's go take a look at the Joseph A. Banks stock chart out here. Let me get rid of one thing on here, make it a little bit easier for you to view. Now, what Joseph A. Banks did, this thing here has a high volume low, significant high volume low, by the way. January 28th, 4.9 million shares to the downside. And this had broke down. It broke down on January 25th. January 25th, the low was 45.78, the high 46.52, 140,000 contracts. That was a little open window. That window got repaired. It got repaired on Friday out here. Let's go see what it did as it came back and tested the swing point high because that was also a swing point where it broke down. As we take a look at volumes, there was 140,000 shares. On Friday, 263,000 shares moving up into it. But, of course, you know the benchmark here. You know the rule. And the benchmark was really 4.9 million shares out there. So it got back into a previous area of resistance. There was also another area, another window out here. And that window was from the session here of November the 27th. We'll make a black line there. That was a move down, another breakdown area inside Joseph A. Banks. That was with only 2.6 million shares. It looks like Joseph A. Banks will go ahead and at a minimum come back to at least where it most recently broke out. That was April the 4th. It's trading inside that candle as we speak. The low of that candle is 40.22, but most likely what it will do is come all the way back down into the January 28th area around 37.31. That is Joseph A. Banks breaking down again here. Now, you can also see inside Joseph A. Banks its last sign of strength, really significant sign of strength, was back here on August the 29th when it moved up with about 4.3 million shares. So that's on Joseph A. Banks. Looks to be really traveling in a sideways consolidation range. In fact, as we pull this back, we can most certainly see that consolidation. But right now it wants to consolidate and head towards the lows of January 29th out there. Let's go take a look here at Mosaic. MOS is the ticker symbol. That's trading off just a bit this morning. This has been a strong equity, and Mosaic has also been traveling into a area of resistance. That resistance is where it also had broken down. Now this breakdown area takes you all the way back into the time frame of September of 2011, September 22nd to be specific. This thing moves down with big volume spike, 14 million shares. As it does that, makes this has got several nice patterns out here. Makes number one, it makes that nice island reversal. This is quite a time period later. This island reversal, if you're not familiar with what an island reversal looks like, then pull up the stock chart. MOS is the ticker symbol. It's Mosaic out here. And as we take a look at that nice island bottom out here that formed during the time period of November 14th, 15th, and 16th out here, you can see where we had the gap down. You had a big high volume day on November 14th, and then you had that move up, that gap up on November 19th, goes ahead and runs up to where it should have run, which was the top of the consolidation range, which was really set up by that original gap down here from September the 22nd. Price here closed just above it, just for a tad here back on May 8th, so early last week. Now moving back down, couldn't bust it up. That says that this thing could easily go ahead and, the first target, and you should always look at the first target on any equity that you are trading or you are watching. The first target is going to be pretty simple. You come back into the most previous swing point out here. The most previous swing point is going to take it back into the April 19th area, right around $57. Now, what do you have down in that $57 area? Well, you've got to come over a little bit further to the left of the chart when you see that morning star reversal configuration. That's a 3-candle configuration. That took place on February 26th. Really, the 3 sessions were February 26th, February 25th, and February 27th. That 3-candle formation out there. So it looks like that is where Mosaic, depending on volume, should find a support level. If it breaks through that, what it will do, it'll come back and try to rescue all those stranded passengers on that island out here that we talked about that formed back in November 16th time frame. Mosaic, if we take a look here at the volume so far today, 800,000 shares, so it's got some pretty decent volume. This was after making high with 4.3 million shares just a few short trading sessions ago. Mosaic, MOS, that is the ticker symbol. We've got Stratasys. They were out with numbers here before the bell. They reported non-GAAP net income of $17 million. Net sales 97 versus 44, so a nice move from a sales standpoint. And the looks like here, where is the loss per share of 40 cents versus 21 cents from the year prior. SSYS is the ticker symbol. So let's go see what this is doing. This is one of the 3D companies out here in the marketplace. You got X1, you got Stratasys, and you have 3D Systems out here. SSYS is the one we are looking at here today. This had formed a 0.786 Gartley buy pattern. It had done this back in February 25th of 2013. You can see it was a 0.786 Gartley buy. As I mentioned, the targets for any type of Gartley are, your first target should always be a retracement of the full leg move, 0.618 level. That was 81.26. In fact, that's what this thing had accomplished back here on April the 11th as it got up to a high of 81.45 out there. 80.26 was the 0.618 level. As it was moving into that, it was doing it with some increasing volume, so that was not too shabby. And this also had a nice move up, a nice sign of strength here, as on March the 4th. It gaps up with 3.7 million shares. That was only about 4 trading sessions prior to forming that 0.786 Gartley sell. Now what it has formed, and we'll go ahead and draw that on the screen here. It looks like what this really formed was the next pattern, which was the Gartley sell pattern. It originally formed a Gartley buy. We'll be right back. I'll clarify all that for you in just a moment.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow trading on 54 points right now out at 15. 063. S&P off about 6 points, trading at 1627. And let's go back now and take a look at Stratasys out here, because I certainly don't want to confuse anyone. And it's a great looking stock chart to look at, because we got two Gartley patterns out there. And folks, if you are struggling, or you're not struggling, if you want to really learn about Gartley buy, Gartley sell, butterfly patterns out here, then come on over to the homepage of TFNN.com and go test drive the art of the chart out here. In fact, you can take advantage of our Tiger Dollar promotion. In fact, if you do have any TFNN services, you want to come over to the homepage of TFNN.com right now while you can still get your Tiger Dollars. It's something that we do just a couple of times a year. Right now it's going on. You get a 20% bonus on any purchase of $500 or more. And on top of that, we'll also go ahead and we'll donate on your behalf to the One Fund anywhere between 5 to 10% of your Tiger Dollar purchase, depending on the level at which you buy. But the art of the charts, most incredible software package tool, really so functional in so many ways. One of those ways is a scanner for being able to identify Gartley buy, Gartley sell, butterfly patterns that are out there. And they would have identified this on the Stratasys, both the Gartley buy and the Gartley sell. The Gartley buy pattern out here is the one that completed back here on February the 25th. We covered that. What is your outcome of any Gartley pattern? What is the likely outcome? The likely outcome is always going to be the sweet 618 retracement of the move. And the move here was off of the high of January 22nd in Stratasys from 92.30 all the way down to the low that was put in on February 25th. That level was 80.26. We noted that that is what took place on the trading session of April 11th. Your next level above the 0.618 is going to be the 0.786 area. That is, in fact, what Stratasys finally did here, and it did it last week. As it was doing that, it was accomplishing that on the trading session of May the 6th. Well, what else was going on May the 6th out there? You got it. A little shooting star reversal candle out here. That is on Stratasys. So as it was completing a 0.786 Gartley sell pattern now, and I'm showing the Gartley sell pattern, so it was making its objective, its outcome of that Gartley buy. The first objective is 80.26. The second objective is the 0.786 level. The third objective is that it turns into a full-blown new A to B equals CD pattern. Well, in this case here, makes the 0.786 level, does it with a shooting star. In fact, we had a shooting star that occurred here on May the 6th. That is the kin. That is the next of kin to the hammer candle. That just simply occurs up at the highs. So just as hammer candles are important at the lows, shooting stars are also important at the highs in identifying resistance. What happens here on Friday? You get another shooting star on May the 10th out there as it gets up to 85.41. What are we having today here in Stratasys? Well, we're having a bearish engulfing candle. So significant resistance and this 85.56 level. That also sets up that Gartley sell pattern. That is the yellow pattern that you are looking at on my chart. If we take a look at what are the outcomes here, it's the same thing. So you can get into a trade. You know what your outcomes are. Your outcomes with regard to meaning your target. Target area on this is going to be 70.43. That is the 0.618 level. It's also where we have our last swing point inside Stratasys. That's April 22nd. It is all logical out there. If you were in this from a short standpoint, it's at 82.18 right now, and your target would be 70.43. Folks, thanks so much for being here. It is magnificent and marvelous Monday, and I want you to always remember this, and that's that you have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces. But most of all, folks, it creates fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. I look forward to seeing you in a few or seeing you soon. Take care, folks.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.